Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer at Worth Asset Management. Today is February 13, 2023. Happy Galentine's Day and happy early Valentine's Day. As we head into this week and we're wrapping up earnings, we have a big CPI report, but let's go over your three threes for the week. I'm going to go over our major asset classes, their performance, and our three favorite on a long-term basis. And then I'm going to take a look on the short-term basis, what we like and how we are positioned on both equities and bonds. And then I'm going to go over our top three market movers for the week. So let's jump on in.
Okay, let's go over the major asset classes, their performance on a week and on a 1 year basis. After a good start to the year in both bonds and equities, we had some profit taking last week. The bonds were down about 1.5%. The equities in the form of S&P 500, NASDAQ, and Russell were down 1, 2, and 3%. International was also down. Real estate, gold, commodities, and Bitcoin being the biggest loser for the week. We did, however, have the U.S. dollar go up almost 0.75%. But on a 1 year basis, we still only have the U.S. dollar, gold, and commodities as our three positive asset classes, where everything else is high single-digit negative and double-digit negatives, with Bitcoin being the biggest 1 year loser. Okay, let's go over the top three major asset classes on a long-term basis. We had no change last week. We still have T-bills, mid-cap equities, and dividend equities as our top three. So we still have this battle for defense and offense going on right now. And maybe the CPI this week will change that. We shall see. All right, let's go over the bonds on a short-term basis. We've had a nice, again, 3 months here. And so we're still seeing a nice formation with higher lows and higher highs. The interest rates have gone down, which means prices are going up. We shall see if that will continue this week after the CPI report. But so far, so good. Nice little return over the last 3 months as we were adding here back in the middle of November. All right, let's talk about equities on a short-term basis. We have a nice little rally since the last time we started nibbling and buying at the beginning of this year. However, like I said last week and the week before, we've got to get through this 41 to 4,200 on the S&P 500, and we literally went right up to the top of it and came right back down, and now we actually are below it. Again, nice formation with higher lows and higher highs, but we've got to break through this before we can get the all clear. We will probably trade with inside this trading range for the support and resistance zone here probably until we get some news. And again, not to say the CPI number could be a mover, but it might be on Tuesday. All right, let's go over the top three market movers, and here we go. For Tuesday, we have the CPI coming out for January. Prices are projected to have risen 0.4 last month, and that is going higher than 0.1 in December. So on an annual basis, it will likely have come down to 6.2, down from 6.5. So we shall see if we see that continuation deceleration or it's not down as much. And so we'll see what the market reacts on Tuesday. On Wednesday, I have retail sales. And that's important because in December, there was actually a decline, surprising since that is the holiday season, but they're projected to have risen 0.9 for January. So on an annual basis, likely their sales were up 4.5. So that is important because, as we know, the consumer is 70% of the GDP. So we've got to see some strength in buying on the retail side to say that the consumer is A-OK. On Thursday, we have producer price indexes for January, and that's the inflation that tracks manufacturers and wholesalers. And the producer prices likely rose 0.4 last month. And again, we had a decline in December. So we've got to also see a little bit of bump, but not too much, showing that it's the interest rates, raising of the interest rates is affecting the producer price index or inflation on that end. All right. So this is the one of the last couple weeks of corporate earnings. So here's a listing of the corporate earnings for this week. So there's some of them, but I don't think a lot of these are going to be huge market movers, but they'll probably be in line with their industry heading forward. Okay, that's it for this week. Thank you for joining us. Our next update is actually February 20th. And so continue to like, subscribe, and follow, and we shall see you next week. Have a great week trading.